Welcome back. Well, just a quick reminder of the close that we saw in Asian markets yesterday. Stocks were trading in a pretty narrow range ahead of the Fed's pending decision. We saw the Shanghai Composite edging up 0.2%, whilst the Hang Seng was down by about the same percentage. The Nikkei in Japan, that finished 0.8% lower, and that was in fact back below the 17,000 level. You can see there. Let's just check in on the Aussie dollar, because we've seen it really surging in the wake of the Fed's decision, obviously on US dollar weakness. So it's sitting at 75.7 there against the greenback, strength in fact against those major baskets of currencies. Today we have those employment numbers due out at 11:30 a.m. So a lot saying that if we get a strong employment figure, we could see that Aussie dollar surging well through 76 US cents. So there's going to be a big focus on those currency moves today. Well, that US dollar obviously seeing broad-based falls off the back of that Fed decision, which should be a good tailwind for Asian share markets and China in particular. Let's get some more now. We're joined by James Ordus over at Shaw and Partners. And James, what's the expectation for share market performance across Asia today?
In terms of the Aussie market, it's a little bit hard to determine at this early point, Leanne, because we have index expiry. You would think that it would have some stronger carry through from what's happened with the US markets being very strong on the back of the FOMC decision, more to do with their commentary overnight. And as your guests have pointed out earlier, with the RBA having their speech or they're having some conference at 11 or so today, or 10 today, that will be interesting to watch and hear what the commentary is out of its guided bell, right?
Absolutely, because that Aussie dollar, it's remaining so high at these levels. A lot saying that if we do get that strong number today, those jobs numbers, that we could see that Aussie surging even higher. I mean, any expectations in terms of what we can expect to see?
Well, it was only a couple of days ago that we hit 75.94, and as you pointed out, we're sitting at the 75.70 mark at the moment. We could go to a 76 handle. At the moment, momentum for the Aussie dollar is very, very strong to the upside. It will be interesting to see what DeBell says in terms of where the Aussie's at, because obviously it is not good for Australia to have the higher Australian dollar, and hopefully we won't see the 76. I know the RBA would rather it much lower. I'm not sure that they're able to intervene too much in the open market operations, because they just simply don't have the weight to do that. They may try something, but it's going to be a matter of jawboning it down, and we'll be watching obviously very closely what happens with that.
All right, obviously watching those employment figures closely for the Aussie. Also big reaction that we saw in the wake of the Fed's latest decision to keep those rates on hold, but flagging those 2 rate hikes this year. What did you make of the moves that we saw on Wall Street in response to that? Because obviously really rallied and it seemed to fade and then rallied into the close again. So what did you make of it?
Yeah, it was a jerky move after the FOMC decision. Obviously 100% of analysts out there expected that they weren't going to make a move in terms of interest rates here, but it's all about the commentary. And as you suggest, to go down from what would have been potentially 4 rate hikes through 2016 to 2 is a big redress to what was expected to be the growth that they're going to see out of there, and it took the equities markets higher as a result of that. Interestingly though, when we're having less interest rate hikes in the US, does that mean that the US economy is strong, or does it mean that the Fed's actually concerned with growth? So they're concerned with growth, yet the equities market rallies. So there's a contradiction there in terms of the way things are sitting.
All right, and it wasn't just, I guess, the Fed decision that markets were reacting to. I mean, that was obviously a lot of the key focus, but further moves in those oil prices, we really saw them rallying. Take us through those latest moves.
Well, as we saw for the few early days this week, we came off those highs, and we retraced them again last night. So very strong moves in WTI particularly, but also in Brent. So across both of those, looking to push it at year highs on those guys. And where we're at with them, they're maybe getting a little bit technically overbought, but again, momentum is strong with them. So a little bit of backfilling over the last few sessions has been tacked back on now, and where they go from here, we may see them getting up over the 40 level.
All right, James, really do appreciate your time this morning. Thanks very much.
My pleasure. Okay, thanks.
We are going to take a quick break. Coming up.